Good afternoon, and thank you for attending the second webinar in our New Mexico Recovery Series. The focus of the webinar is to highlight business recovery and resources available. My name is Jennifer Myers, and I'm with the Economic Development Department. Today, we're going to cover the 2021 tax legislation. Since there's a tremendous amount of interest on this topic and due to the size of the group, that we only take a few questions at the end. Our presenters will direct you to some email addresses to get answers to your specific questions answered. And if there's reoccurring questions, then they will include that in their FAQs on their website. We are recording the session and we'll send out a link to it and a copy of the presentation to everybody who has registered. So let's go ahead and get started. Oh, sorry about that. Let's get started. Now I'd like to introduce you to our recovery squad. Once again, I'm Jennifer Myers. I'm the statewide disaster recovery coordinator. My focus is economic recovery through direct outreach and help to coordinate efforts to facilitate business growth. Felicia DePaula is our program development specialist, and she's helping with the statewide plan and the Rural Efficient Business Program. Alex Greenberg is our third member of our team. He's our financial program specialist, and he is the point person for all funded and opportunity zones. We just hired a fourth person to our team. They'll be the economic and energy diversification coordinator. And of course, we have Shawnee Harvey, who's our Jedi, and she also assists our group. I'd like to take the opportunity to highlight our Collateral Assistance Program. The New Mexico Economic Development Department encourages banks to make loans to small businesses in underserved markets. The New Mexico Economic Development Department can pledge cash to cover a collateral shortfall of a loan in order to enable financing. This translates to cash support for up to 50% of the principal with a maximum amount of $250,000 for under-collateralized loans. The use for the funds include tangible, intangible asset purchase, startup costs, working capital, franchise fees, equipment, and inventory. Preference is placed on businesses located in rural areas, minority-owned, veteran-owned, job creation, and generates income from outside of the state. To learn more about the program, just click on the link provided in this slide. I'd also like to mention our next New Mexico Recovery Series topic. Each region has a regional recovery coordinator that are the boots on the ground to help assist businesses and the community. The next scheduled webinar in our series will highlight each recovery coordinator from each region. So save the date, July 20th, 10 a.m. We now have the full recovery squad putting together a weekly email we call the wrap up, and it's more robust than ever. As you're well aware, it's difficult to stay current on all local, state, and federal programs. We highlight funding opportunities, free resources, promote webinars that focus on economic recovery. We list as updates on the SBA, USDA, New Mexico Finance Authority, and any state programs as well. It's a wealth of information. I would highly recommend everybody sign up that has not done so already. Well, that was short and sweet. So now I'd like to pass the presentation over to our fantastic speakers. We're honored to have the Secretary of Taxation and Revenue, Stephanie Schardin Clarke, Deputy Cabinet Secretary, Emily Oster, and Tax Policy Director, Mark Chaiken. So with that, I will stop sharing and pass it over to you.
Thank you so much for the introduction, and it's a real pleasure to be here with this audience today. There are a lot of changes coming to tax in New Mexico just around the corner, and we really appreciate the opportunity to speak to this audience through the Economic Development Department to make sure that taxpayers are aware as possible of the changes that are underway. So Mark is sharing the slides. He's going to be driving them for us. I'll get us started with some overview of recent legislation that was enacted in the 2021 legislative sessions, and then Mark will take you through some changes related to destination-based sourcing, which is very important for the gross receipts tax and compensating tax. And finally, our Deputy Secretary, Emily Oster, will talk about the CRS redesign that's rolling out over the weekend of July 4th and the new TAP, the Taxpayer Access Point. So before you, just for your reference, we have our org chart of our executive leadership team. Most of these folks have been in these positions since about two and a half years ago. We came in with the new administration. However, there are several who have, more than 15 or 20 years experience with tax and rev, and we're very lucky to have that balance of sort of new folks plus institutional knowledge to put it all together. Next slide. Okay, as I mentioned, I'll be highlighting just a few of the most important tax-related pieces of legislation that were enacted in the 2021 regular and special session. And so the first one to make you aware of is Senate Bill 1. This was a bill that was passed pretty early in the regular session, and it's got two very important pieces of pandemic relief. The first, hoping you're aware of, and if you have employees or family members or anyone that you know who might be eligible who hasn't filed a tax return for tax year 2020, please make them aware of this. A $600 rebate is available to anyone who files their 2020 return who meets these eligibility requirements that I'm about to go through. The taxpayer needs to receive the working family's tax credit. They need to not be someone else's dependent. They need to be a New Mexico resident, and they have to have low enough income. If they're a single filer, they have to have income of $31,200 or less. If they're married or head of household, $39,000 or less. And they don't need to do anything special to claim the rebate. If we just run all the returns we receive through these eligibility and automatically send the rebates if the taxpayer is eligible. And so to date, this has injected almost $94 million into the New Mexico economy since the tax filing season started. And that has gone to about 156,000 tax filers. And for comparison, we have about 1 million tax filers in New Mexico. So about 15% of them have received the rebate thus far. The second thing that was included in Senate Bill 1 was restaurant and bar and food truck relief. There's basically a gross receipts tax holiday for restaurants and bars from March 1st until June 30th of this year. And so the way this works, if you're not familiar with it, the restaurant or bar sells their food and beverages. They collect the gross receipts tax as they normally would, but then they deduct all of their receipts and don't remit the tax to the state. So if the gross receipts tax in your area is, say, 8%, you've collected that 8% that would usually be taxed, and then you keep it. So it's just a cash flow boost to restaurants, bars, and food trucks. There are a few restrictions. It's not available for fast food or packaged liquor sales. And the state pays the full amount of this. There isn't a local government revenue impact. So far, the uptake has been lower than we expected. During the session, when we estimated the cost of this tax relief, we were guessing it was going to give about $90 million in relief to restaurants and bars. To date, it's only been about $17 million. And so part of that is that, we do expect that the months of May and June will have more restaurant activity and receipts eligible than March and April. However, we are thinking that we need to get the word out, and we've been kind of talking to anyone who will listen to make sure that restaurant and bar owners are aware of this. So pass on the word. Next slide. I think the next slide is going to be about cannabis. And I know I can see Mark is trying to change it. I'll start talking about it because I'm pretty sure the next slide is about House Bill 2, which is cannabis from the special session. And so there are two pieces to it, really. There's the regulatory part and the tax part. And on the regulatory side, basically just know that the Regulation and Licensing Department is going to be regulating the sale and licensing and everything of cannabis producers and sellers. Also, the medical cannabis program is moving from the Department of Health, where it has been located for over a decade since its existence, to the Regulation and Licensing Department. And so that department is working hard right now on issuing regulations and all the licensing requirements and doing outreach with the folks who will become licensed to produce and sell. And on the tax piece, that's what we're more involved with. And I'm just going to pause for a second before I talk about that and see if we need to do anything. I don't know, it looks like the slides are frozen.
Yeah, Mark, do you want me to take over the presenter?
Oh, it looks like Mark might have been having internet issues. So yeah, if you could, that would be great.
Sure, just give me one moment.
Oh, it's one back from there.
Okay.
So while we get those back up, I'll wing it for a second and keep talking to you about cannabis without a slide. So one of the first things to know is that the tax is coming off of medical cannabis sales. Medical cannabis sales had always been subject to the gross receipts tax up until this point. And as of June 29th, just 6 days out from now, the bill removes the gross receipts tax for medical cannabis sales. Then, as of no later than April 1st, 2022, that's the deadline to begin selling commercial cannabis products. As of April 1st, 2022, the state will be licensing and it will be able to sell commercial cannabis for adult use. There's going to be a new cannabis excise tax on that product, and it phases in gradually over time. The tax on cannabis starts at 12% for fiscal years 22 through 25, and then after that it increases by 1% per year until it reaches its final rate of 18% by FY31. And just to also note that commercial cannabis is also subject to the gross receipts tax. So to get the total amount of tax being imposed on commercial cannabis, you add together the cannabis excise tax and then the GRT that's also charged. Where does that revenue go? About 2/3 of it goes to the state general fund, and 1/3 is going to automatically be distributed to the municipality or the county where the sale occurred. And I think that's everything I needed to cover on cannabis. So next slide, please. And then the last legislative thing I wanted to tell you about was it's kind of wonky. It's for tax nerds like ourselves on the call with you today. Senate Bill 218 was called the Uniform Division of Income for Tax Purposes Bill, or UDIPTA. And basically, New Mexico is a member of a multi-state tax compact with dozens of other states. And really that compact has to do with uniformity, trying to get all states more or less in the, rowing in the same direction in the way they impose taxes and the way they audit and things. So we're part of that compact. And in 2019, when we passed one of the most significant tax bills that we've had in decades, that was House Bill 6, we made changes to the way the corporate income tax is sourced, and we mandated market sourcing rules. And so basically there was a technical change that needed to be made this year that we realized we had an inconsistency in statute where we had our own statute say that you needed to follow mandatory market sourcing. However, we still had the compact in our statute saying that that was optional for the taxpayer. It's kind of technical, but just know that those corporate income tax sourcing rules that were put in place in 2019 are mandatory, and there's no confusion about that. And with that, I believe that's the last of my legislative slides. We turn it over to Mark to talk to you about destination-based sourcing. Thank you.
Thank you, Secretary, and I apologize for the technical difficulties. I'm told my computer connection is unstable.
Oh no.
Probably not the unstable thing here, but we'll do our best. Let me know, everyone, if I break up or if I become unintelligible, please. Okay, so good morning, good afternoon, everybody. Welcome to Destination-Based Sourcing. I'm here to tell you about this big change that was made in 2019 and 2020 with an effective date of July 2021, so coming up in just over a week. Next slide, please. So why has the state moved to destination-based sourcing? There's two things actually at work here. House Bill 6 that the Secretary just referred to in 2019 provided for GRT on internet sales and a shift of sourcing rules. So there were two things that happened there. The first is that because of the US Supreme Court decision in the Wayfair case that some of you may have heard of, that changed what we call the nexus requirements. And what that refers to is the power or the authority of the state to tax out-of-state sellers, people who are selling into the state, but who have no physical presence here other than the goods or the product of services that they ship into the state, rather. So prior to this Wayfair decision, there was what's called a physical presence requirement that could be fairly small, but sellers like Amazon is the big example, who had no physical presence in the state, were not required to either collect or remit GRT on internet sales. The Supreme Court changed that rule in 2018 in the Wayfair case that I referred to, and now there's a new test. It's a look-back test that says, did you have at least $100,000 of business in the state in the prior year? And if so, then the state has the power, has the authority to require you to collect and remit the GRT. You don't have to have a physical presence in the state at all. So that was the first step, and from that commenced in July 2019, and internet sellers began remitting the flat state rate of 5.125%. At that point, and up until July 1st of this year, we're using what's called a business location test. That's the current test. Because the business was located outside of the state, there was no ability to use local or to charge local option rates. So there was just the flat state rate of 5.125%. From July 1st, 2021 onward, internet sellers will begin remitting both state and local GRT because we are switching from origin-based to destination-based sourcing. So very quickly, origin-based sourcing is what we have, again, that's in place until the end of this month for one more week. And that looks to the location of the business in order to determine the correct rate of local GRT. There is the flat state rate of 5.125%, but localities, mainly counties and municipalities, but some other things like tax improvement districts, other special districts, can also charge local option rates on top of the state rate. And so rates around the state can vary from as low as 5.125% all the way up to over 9% in some localities that have imposed many of their local option increments. So as a business, how do you know what rate to charge? Well, up until now, you could simply look at where is my business located? And if, for example, if your business is located in Albuquerque, New Mexico, you would look to see what the rate is in Albuquerque, New Mexico, the 5.125, plus whatever local option rates were in place, had been put in place. And that would give you your rate. And the department published a table twice a year to show what those rates were. Well, now we're moving to destination-based sourcing. And what that means is that for the most part, and we'll talk about some exceptions, but for the most part, you will look to where the tangible personal property or the product of the service is shipped or delivered to determine what the rate is. So again, if I'm that Albuquerque business, I would no longer look to my Albuquerque rate, my local option rate plus state rate in Albuquerque. Now I have to look at where that product is being delivered. And that may be different. It may be outside of Albuquerque and it may give you a different rate. Next slide, please. So what you see here is a picture of a map that has been created and that is available on the TRD website. And you can see the direct link down there on the bottom left. This is an incredibly useful map. What it will allow businesses to do is when they have an address or a location where either their tangible personal property is being shipped to the purchaser or the product or the service is being delivered to the purchaser, and you can now type in your address and it will tell you both a location code that you will use to report on your what was a CRS return, and Deputy Secretary will be talking about what we're calling that as of July 1st, but it will give you the code to put in on your return, and it will also tell you the rate. So it's an incredibly useful tool. It has a lot of other functionality, and I strongly encourage everyone to go onto the website and play with it a little bit because it's really a very powerful tool and very interesting to use. I think it's incredibly useful for businesses who are complying with their reporting requirements. So please make a note of that link. I think we can provide you with a copy of the slides, but please do go explore. If you're representing clients, encourage them to go explore that map so that they can be familiar with how to determine the correct location code and the correct tax rate for when they're doing their reporting and billing. Next slide, please. So again, we've gone over some of this a little bit already, but until June 30th, 2021, GRT is reported at the seller's place of business or origin-based sourcing. There are some exceptions for construction services, real estate commissions. These are already reported at destination construction site or property location. So there is, we already have a somewhat hybrid model, but the vast majority is origin. Another thing where there's an exception will be Indian tribes and pueblos that have cooperative agreements with the state. And I can't get into too much detail in the time that we have, but there are these exceptions. So from July 1st, 2021 and after, the GRT location for goods and services is going to be the buyer's delivery location. And again, that's either where the tangible personal property is delivered or where the product of a service is delivered. And the Supreme Court, the New Mexico Supreme Court, has told us that when you are performing a service, there's always a product of the service that needs to be identified. So it may seem like, well, sometimes I'm performing a service. You don't look always or even often to the location where the service is performed, but where the product of the service is delivered. And that's a subtle but very important distinction. And I'm going to get into more detail about this later. The statute and the regulations make a distinction between professional services and other types of services, and then further subdivide professional services into those that are in person and those that are not. So professional services that are not in person are still going to use what we call origin-based or business location sourcing. So in the regulations, and we did have a hearing on these regulations that was held on April 29th, and they will be effective as of July 1st, which is the same as the statute. And the statute, for your reference, is section 7-1-14. It was amended in 2019 and again in 2020 to become effective July 1st of this year. We give some examples of professional services that are not in person and those that are in the regulations. That's 3.1.4.13 NMAC. Those are on our website. They will be available. They already are available in draft form. The final version will be available on our website as well, and in the formal compilation of the administrative code. Next slide, please. So how does destination-based sourcing affect reporting? I'll go into a little more detail here. There's a whole, the regulations set out a whole bunch of different scenarios. There's really 5 categories of types of either receipts, I guess is the correct word, that depending on the type of receipts, that will help you determine the sourcing. And that's, again, all set out under 7-1-14 in the various subsections. The 2 biggest ones that I want to talk about are tangible personal property and services, because those are the most complex. So for tangible personal property, the rules state that there's a waterfall of rules. Only the first 2 or 3 are really going to be relevant. If you're selling tangible personal property in your store, in your business location, and say a customer comes in and buys the product from you, the tangible personal property from you, and leaves the store with it, then it's going to be, that is the destination where the product hasn't been shipped, but it's been received by that person at your business location. So if that's your business model, then you're actually not going to see any change, because the destination is going to be just the same as your business location. So there won't actually be any change there. For the next rule says, well, if they don't do that, the location you should use is the location indicated by instructions for delivery to the purchaser when known to the seller. So again, if someone comes into your store and says, I want to buy, let's say something larger like a piece of furniture that they're not going to be walking out of the store with in most cases. You know, sometimes we can imagine someone putting that on the back of their pickup and taking it home with them, but for many people, they'll say, you know, I can't take it with me, please deliver it to this location. And that's the location that you will use. And the seller is entitled to rely on the information that they receive from the purchaser. We've had some questions. Well, what if the purchaser, you know, is on the border, for example, between 2 counties that have a different tax rate and one is more beneficial. And so that person decides to deliver to a PO box in the lower tax jurisdiction and then take it into their higher tax jurisdiction. There's really no way to control for that. We can't require the seller to go behind what the purchaser has told them. So the seller is entitled to rely on what the purchaser has told them and given them in terms of delivery instructions. The third one that may apply is if you have someone who's accustomed to doing business with you and they call you up and they say, hey, I need 100 gross of paper clips. Could you please deliver it to the usual place? Then you can use the address that you have on record. So that's where they don't necessarily specify, but you have business records that indicate where the delivery location is going to be. You can use that. Again, you can rely on your own records. And then there's a couple more down the waterfall, but I think those three are going to take in probably 99% of sales. But if you have questions, I encourage you to, if your sale doesn't fall into one of those three categories, please do go look at the statute, do go look at the regulations. And then if you still have questions, you can contact our department and we'll do our best to get you an answer. Talking about services, this is really the most complex. Again, general services, which are in-person professional services, or which include in-person services, change from origin to destination-based sourcing. And what that means is that if a service is performed on a person or on that person's property, if you have to be physically present with the person or their property to perform that service, you're going to use the place where you're performing that service. And some in the regulations, we give some examples of what professional in-person services are. The best one is healthcare. For example, your physician is probably going to need to be with you in order to perform their services. Services performed by athletic trainers or physical therapists, services provided by barbers and cosmetologists, and home health care services. These are going to be examples of in-person services where you're going to use the location of where the service is performed. Example of services that are not generally treated as in-person services, and again, we're talking about professional services, are architectural engineering services, legal services, accounting and tax preparation services. There's an important thing to note here. If you're an accountant, for example, you may occasionally need to go to your client's offices, either to interview your client, to look at some books and records, or for those sorts of reasons. Just because occasionally you do go to do things in person doesn't convert it into an in-person service. So if there's an occasional in-person visit as part of your overall service, that won't make it an in-person service. It will still be a professional service and it will be sourced to your business location, which is going to be your office. A word about what is considered professional services. Professional services are those that either require an advanced post-secondary degree or those that require licensure from the state. On the first part, we're generally taking that to mean it requires some sort of master's degree or some sort of degree beyond a bachelor's or associate's degree to perform. Certainly a lawyer needs a JD, an accountant, CPA needs a license, those sorts of things. But there may be other sorts of services that need licenses that we don't customarily think of professional services. Again, a barber or cosmetologist, we may not customarily think of them as performing professional services, but because their services, to perform them, they do require a license from the state. For purposes of destination sourcing, those are considered professional services. So again, going down to the next box on this slide, professional services other than in-person services that require an advanced degree or a license from the state, there's no change from current origin-based sourcing. You will, in fact, continue to use the location of your office or the other business location that you would customarily use. Finally, for construction services and real estate services, there's no change. Those are already, as we mentioned at the beginning, destination-based. So again, if you're doing real estate, construction, for example, you would look to where the real estate is located, not to where your office is located. There's a slight exception here that I want to make everyone aware of. Architectural services I mentioned as professional, non-in-person services. The exception is if you have those architectural services are performed as part of a larger construction project. So you have a large construction project to not only design but also build a building, then you're going to use the location of that building or the location of the real estate where the building is going to be constructed, even for the architectural services. So analysis of these in-person professional or general services can be complex. And if you're not a tax professional, we encourage you to seek advice from your tax professional, from your accountant, or if you do have a lawyer, from your lawyer. If you are an accountant or a CPA or lawyer yourself, we do encourage you to analyze these questions carefully and read through the statute and the regulations carefully. And if you do have questions after that, again, Deputy Secretary will be providing some email addresses that you can use to reach out to the department to try to get some advice. Some other factors affecting taxability include whether the service is initially used in state or out of state. As I mentioned at the beginning, every service has a product according to our Supreme Court. And so what the statute actually says, and this is talking about professional services, is that for services that are professional in person or performed outside New Mexico, where the product of the service is initially used in New Mexico, the location of the performer of the service. But for other services, it's the location where the product of the service is delivered. And I'm referring here specifically to section 7-1-14, subsection F5. So again, don't always look to where the service is performed, but if you're talking about these other services, which are professional services that are performed in New Mexico, but that are not in person, you want to look to the location where the product of the service is delivered. So again, that can be kind of complicated, making sure that you understand that distinction between where a service is performed and where the product of the service is either initially used or delivered. And that's throughout the entire Tax Administration Act and the Gross Receipts and Compensating Tax Act. Those are very important distinctions to monitor. So again, if you have questions, I look very carefully, but the department is here to try to help you answer your questions as we make this big change from origin-based to destination-based sourcing. Next slide, please. Finally, yes, prior to July 1st, 2021, there was no local option compensating tax. And again, compensating taxes are different from gross receipts tax. They complement the gross receipts tax. A compensating tax will generally be due from the purchaser when a gross receipts tax, when a seller is not liable for the gross receipts tax. We do expect there to be less compensating tax filing now because it really applied when there was no nexus, when you had an out-of-state seller who had no nexus with the state and then was selling stuff into the state. Theoretically, the purchaser was liable for that compensating tax. But now that so many more out-of-state purchasers are going to be liable for GRT because of the change in the nexus requirements and the moves to destination-based sourcing, many more sellers are going to be remitting GRT on property shipped into New Mexico. So previously, if you had Amazon shipping into the state, they weren't collecting or remitting the GRT, and theoretically, it was the responsibility of the purchaser to do that. However, there was also a statute that said the department could not attempt to collect compensating tax against individuals. That's now also been repealed, so individuals are liable for compensating tax. I will say that administratively, this is a very difficult tax to collect. We do rely on folks to be honest, and previously, for example, if you bought say clothing or bicycle or something, some item out of state, and you brought it back with you into New Mexico and we're using it here, you were liable to pay that compensating tax. It's very hard for us to track that And we couldn't previously even proceed against individuals. We were prohibited, even though they had a duty to pay it. We weren't allowed to try to collect it if they didn't pay it. But that's changed now. And the department is looking at ways that we can make this enforceable and but without burdening taxpayers to a great degree. So we're looking at maybe creating some safe harbor provisions, but right now that's all under discussion. But you do have a duty to pay compensating tax if the seller didn't collect and remit, had no duty to collect and remit the gross receipts tax in most cases. And prior to July 1st, there was just a 5% flat compensating tax rate. But following July 1st, the local compensating tax, which should be equivalent to the local gross receipts tax, will be added to that 5%. So there'll be a larger percentage collected. But as we said, we expect the amount of receipts that are subject to this compensating tax to go down because so much more will now be subject to the GRT. Next slide, please. All right, that is all that I have, and I'm going to turn it over to Deputy Secretary Oster. And again, we encourage you to read everything carefully, but if you do have questions after you've done that, please do contact us at the addresses that she's going to tell you about at the end of this presentation.
Thank you, Mark, and thank you to the audience for your time and attention today. We're delighted to have the opportunity to speak with you today about all these big changes that are coming in the next couple of weeks. So the Secretary and Mark did a wonderful job of taking you through the statutory and regulatory changes that are coming. I'm going to talk to you a little bit about some administrative changes that we're making in conjunction with the implementation of those new statutes and rules. So there are two main things happening on the administrative side. We're redesigning the combined reporting system, and we're also upgrading our GenTax system, which is what powers the Taxpayer Access Point, or TAP, which a lot of you probably use to file your current CRS returns. Next slide, please. Great. So as I mentioned, we're taking a look at the combined reporting system, and we're redesigning it. The CRS, or Combined Reporting System, has existed for about 20 years, since around 2002 here in New Mexico, and it is a combined return that's used to file taxes for multiple business tax programs here in New Mexico. And over time, more and more programs were added to that combined return. The return form itself and the instructions became long and complex over the years. And so we took a look at that and we decided that it will make it easier and more straightforward for taxpayers and for the department to have tailored returns specific to each of the programs that were previously included in the combined reporting system. So instead of one combined return and one set of instructions, going forward, we will have 7 different returns with their own tailored instructions. And each of those returns will be specific to a particular program. So if you're a taxpayer that only files regular gross receipts tax, you won't see fields that are needed for things like leased vehicle surcharge and interstate telecommunications, some of those smaller, more specialized tax programs that were included on the combined return but don't apply to many taxpayers. So the big takeaway from this slide is that we are decoupling the combined reporting system and creating tailored returns. So the way that you file business tax returns in New Mexico is changing. Next slide, please. So why are we doing this? Well, as I mentioned before, over time, the combined reporting system resulted in a complex form and also complex instructions. As that system matured over the years and more tax programs were added, the return itself and the instructions just became more and more complex. So by breaking it out into separate tax programs, the forms and instructions are simpler and they're more tailored to the particular tax programs. The vast majority of current CRS filers, over 90% of current CRS filers, either file only regular gross receipts tax or regular gross receipts tax and wage withholding. So it's, the vast majority of our current active taxpayers only use one or two of those 7 programs that are gonna exist now after July 1st. So we believe that this will reduce errors, both on the taxpayer side and for the department, because the complexity will be reduced, and it'll hopefully make voluntary compliance easier. That's the goal. These simpler, tailored forms and instructions are designed to try to make it easier to file correctly the first time. It will also make it easier for the department to apply payments as a taxpayer intends, particularly partial payments. Right now, what happens is when someone makes a partial payment on their combined reporting system account, our system automatically prorate it across all the tax programs on that account that have a liability. And oftentimes that's not what the taxpayer intends. It may be that the taxpayer intends to pay all of their wage withholding, but not their gross receipts tax. And by default, our system prorates those partial payments. And then in order to correct that, there's often intervention required by the taxpayer and manual intervention on the department side to move payments around and get them applied correctly. So because with the new tailored system, you'll have a payment associated with each of those different accounts and those specialized tailored returns, we believe that this issue of misapplied payments will be greatly reduced. We also expect a reduced taxpayer burden with the new filing system. There'll be a decreased need to file amended returns and submit supplemental information. Right now, with the combined reporting system, we actually have many taxpayers that file more than one CRS return for the same period. And the way that that can come about is that the taxpayer may have a third-party provider that does their payroll taxes and their wage withholding, and then perhaps another third-party provider, or maybe their own in-house staff or themselves that file their gross receipts tax return. So what that can result in is the payroll service provider filing a CRS return for wage withholding, and then another party filing another CRS return for the same taxpayer, the same period, to report the gross receipts tax. And that doesn't work very well, unfortunately, in our system. We can have issues where returns are overwritten or things can be doubled, and there's an increased need for amendments and supplemental information. So by having wage withholding and gross receipts and all 7 of these programs broken out into their own account types, we believe that need to amend returns and submit supplemental information will be reduced. On the department side, all of these changes will help us automate our processes, and that translates into better customer service for you because manual processing is very time consuming. So to the extent that we can automate our processing, that benefits our ability to provide exemplary customer service in cases where manual intervention is needed. Next slide, please. So many people hear more forms and think, okay, that means more work. Well, in this case, we think that's actually not going to be the case. As I mentioned, there are going to be 7 forms now for the decoupled tax programs that were previously included in CRS. We have yet to identify any taxpayers that file all 7 of those returns. The reason is because some of them are very specialized. So for example, in order to file all 7 of those returns, you would have to be involved in a business that does interstate telecommunications, leased vehicle surcharge, governmental gross receipts tax. In addition to regular gross receipts tax, wage withholding, there's also non-wage withholding. You know, it's pretty diverse, and some of these tax programs have a very small base. Some of them have fewer than 100 regular filers. So as I mentioned before, over 90% of current filers will file only regular GRT or regular GRT and wage withholding going forward. And in many cases with wage withholding, that is handled by a third-party service provider, such as a payroll service provider. So they're already filing 2 returns now. They're just filing 2 different versions of the CRS return. The tailored returns, as I've been mentioning, should be easier to understand and get right the first time. So we expect that there will be a reduced need to file amendments and submit supplemental information. And the overarching theme and goal of this project is to promote voluntary compliance. And over the last 20 or so years, the department has noticed that the complexity associated with the combined filing system has created challenges for taxpayers and for the department. So we're very excited to be rolling out these changes. I'll talk a little bit more about the timeline later in the slides. Next slide, please. Okay, so this is a preview of what the new and improved taxpayer access point is going to look like. So for those of you that are familiar with TAP, you'll see this is a big upgrade. It's a big modernization effort, and the driver behind this is the version upgrade. We're moving from version 10 of GenTax to version 12, and along with that comes this new and improved, beautiful taxpayer access point. So I want to draw your attention to a couple things while we're on the home screen here. In the upper right-hand corner, you'll notice an icon that looks like a Roadrunner, and that is Speedy. That is our new e-services assistant. Sometimes these are referred to as chatbots or other things like that, virtual assistants. So Speedy can help you find information. You can ask a question to Speedy and they'll provide an answer or provide resources to get additional information. We're excited about that. We did not have a chatbot before, so this is new, a new feature of the new and improved TAP. To the right, next to Speedy, you'll see a teal circle with a question mark inside of it. That is where you'll click to get help and get access to FAQs. And then directly under the beautiful photo of the Sangre de Cristo Mountains, you'll notice a magnifying glass. That is the search bar. So this is the way to search non-logged in TAP before you've logged in. Down below the search bar, you'll notice that we have different tiles for personal income tax, submissions, payments. There's one for help. There'll be one for businesses, for business registration. So we think the new look and feel of TAP will make tax filing more intuitive and, again, promote that voluntary compliance, make it easier to find the information you need to file your tax return efficiently and easily and get it right the first time so that you won't have to receive any letters from us or have any back and forth with the department. Next slide, please. One more back, please. I think we skipped one. Perfect, thank you. So this slide talks about some of the new features of TAP. As I mentioned, TAP is much more intuitive and user-friendly now. There's an action center that provides reminders and guides users through filing and payment. So in that action center, the first time you log in July, you'll see that you may have correspondence, for example, from the department. You should have a letter from the department explaining the new filing system and telling you what accounts we've set up for you. You may have returns that are due to be filed in July or payments that need to be made. Those prompts will show up for you in the Action Center, and you can dismiss those or you can choose to act on them. We actually have a great video that we just posted on YouTube that gives you a demonstration of how you can use some of these new TAP features. So I'll talk about that in just a moment. I showed you a little bit about the search function and the help tools. You can also personalize your favorites. I mentioned the e-services assistant when we were looking at the home screen. That's another great resource to find additional information. One thing that's nice about all of these new resources and search functions and the e-services assistant is they're available 24/7. So you don't have to rely on, getting a hold of a live person during business hours. There's a lot of flexibility there. There are self-service changes to registration details, which is something that people have been asking for quite a while. So you'll be able to add new accounts and change your address by using those self-service features in TAP. There's an accountant center for those accountants out there who work on behalf of multiple clients. That'll allow you to manage your client CRS accounts, or actually your client business tax accounts from inside your logged in third-party access. There's a new option to receive email notifications and e-correspondence. We want to encourage everyone to check that out. It's part of our Go Green initiative. And again, another option for communicating with the department. We love the post office, and we'd also love to decrease our mailing costs and get information to you more quickly. So please do consider checking out that e-correspondence feature and opting into email notifications from the department when you're logged into TAP for the first time, getting used to the new look and feel. One thing I haven't touched on too much yet is that we believe these changes will really help improve the refund process. When the taxpayer submits an amended return, there's another step that needs to be done in order to get a refund. So if you file an amended return that results in an overpayment of tax, you also need to submit an application for refund in order to get that money refunded to you. And that process is laid out in statute. So we can't combine it, but in TAP, if you're doing it in TAP, we've tried to make it very intuitive so that if you file an amended return that results in an overpayment, the system will automatically prompt you to submit that application for refund so you can get your money back. You can also choose to apply it to other liabilities. But the big takeaway there is it's 2 steps, but the way that we've designed it in the new implementation of TAP, hopefully it will feel streamlined and seamless, and it will assist people in getting their refunds more quickly. Next slide, please. Crs Id number. So you could hear probably earlier in the presentation, I slipped up a little bit. We're all making this transition. Because the combined reporting system is going away, we needed to rename the Crs Id number. So the new name is the Business Tax Identification Number, or BTIN. Probably the most important thing I can tell you about the BTIN is that if you currently have a Crs Id, your number will not change. It will just be referred to as the BTIN, or Business Tax Identification Number, going forward. And then as we issue new registrations to new businesses, they will be issued a BTIN going forward. Now, we are aware that many other governments and other types of agencies use the Crs Id number for different purposes, for example, business license registration and other things like that. So we have done a communication push to our partners in the government world to let them know about this change. And so we don't think there'll be any hiccups, but we wanted to let you know. So the big takeaways here are you won't have to register again. You will continue to use the same number that you have now, but instead of referring to that as a Crs Id, we'll now refer to it as a Business Tax Identification Number, or BTIN. Next slide, please. Okay, so I mentioned YouTube earlier. These are some resources that we have that you can learn more about the CRS redesign project. We've established a dedicated web page about the project, which includes a very helpful list of frequently asked questions. As was mentioned at the beginning of the presentation, we will take questions and we'll post the most common ones to the FAQ there on our CRS redesign website, so that everyone has the benefit of accessing that information. I also mentioned the YouTube channel, and Mark mentioned it as well. We are posting content there every week to help you learn more about these upcoming changes and resources that we have available. So I encourage you to check out our YouTube channel. You can learn about everything from how to file a personal income tax return on TAP, to how to look up the gross receipts tax rate at a particular location using our web map tools that Mark mentioned, and many, many other subjects in between. Also, some of the same information that we've been discussing today about the CRS redesign project, what changes are coming, why are we doing the project, those things are also addressed in a video series on YouTube. You can email questions in to trdcrs.redesign@state.nm.us. So for the most part, that's what we'd like to do with your questions today. We'd like to have you email any questions about the CRS redesign or the GenTax version 12 upgrade to trdcrs.redesign@state.nm.us. On the next slide, we have another email address to send questions about destination-based sourcing. We will try to take a couple of live questions today before we wrap up. But given the amazing size of this audience, nearly 500 people, we are asking you to submit your questions by email so we can follow up with you that way. We also have a notification service that we'd like to let you know about. The link to sign up there is on the bottom of the screen, and you can choose to be notified when the department posts different types of information on our website. For example, when we issue a media advisory, you can be notified and you can receive a copy of that. You can also choose to be notified when we issue a bulletin or an FYI or other types of publications. So there's a lot of different options that you can select, and you can choose to receive those notifications by text message or by email. So we encourage everyone to subscribe to the notification service so you can get important updates from the department. Next slide, please. Okay, so the TAP rollout is going to require some downtime, and we want you to be aware of this. We want you to know as soon as possible so you can plan around this downtime. So the taxpayer access point will be unavailable from the evening of Wednesday, June 30th through the morning of Tuesday, July 6th. And that downtime is necessary in order to convert from the old version of GenTax to the new version and get everything up and running and ready for you to ensure a smooth transition. Let's see what else to know about this. Really we just want you to be aware that it's coming. There are no major deadlines during that time, so we don't expect there to be a huge impact. It's a holiday weekend. Hopefully everyone's off enjoying their 4th of July and not filing their taxes. But for those that might be working during that weekend, we want you all to be aware that the system will be unavailable from, again, the evening of Wednesday, June 30th, which is a week from today, through Tuesday, July 6th. And we will be observing the Independence Day holiday on Monday, July 5th. So the department will be closed on that day. Next slide, please. Okay, so this is the contact information for the secretary, myself, and the tax policy office. I mentioned a little while ago that there was an email address to send your questions on destination-based sourcing to. This is the one here, the policy.office@state.nm.us is where we can assist you with your questions on the change from origin to destination-based sourcing. And with that, I think we may be ready to take a couple of questions. I think we have about 5 minutes left.
Right, well, thank you. That was a lot of information, a lot of good information. There was a couple of questions regarding the links and the presentation and the video. I'm going to be sending out the full presentation, the recording of the presentation, and then I'm going to pull out the links that are mentioned in the presentation in the body of the email, so you don't have to search for it, because that was a couple of questions that people had. For the panelists, I think it's mostly for Mark. There's been a lot of questions on what if I ship my product outside of the state? What would be the tax implications for that? Oh, I'll turn off my video in case it's affecting his.
Mark, I think you're on mute.
Okay, as far as state reporting, are we good?
All right, now, yeah, start again, please.
There is an out-of-state reporting code for deliveries that are shipped out of state. So that will be the 5.125%. There won't be any local option tax there.
Okay, great. Yeah, that was several questions. What about internet sales where tax is added automatically?
I guess I'm not quite sure of what the question is getting at, but if someone is an internet seller and they're selling to you, they should add the tax in. They should separately state what the gross receipts tax is, and that's common for the seller to. Although they are the ones who owe the tax, they often will charge the customer the tax. Of course, not obligated to do so. They're only obligated to pay the tax themselves, but most sellers do separately state and charge the GRT. So that shouldn't be an uncommon situation. And it is the seller's responsibility to determine the correct location code and rate.
All right, thank you. Some questions for Emily. Where will I be able to access the tax that we need to collect before July 1st? And also, if we request a refund on this new system, or can we request refunds on the credit balance of on the old system?
Yes, yes, those credit balances will carry forward into the new system. So you would be able to request a refund if you had a credit now. Although I would encourage you, if you have a credit balance and you intend to request a refund, you may as well go ahead. We could probably get that processed for you in the next week. But if you do have a credit balance that's still on your account when the conversion happens, it'll carry forward into the new system.
Great. And then another question about, for you, Emily, is what will we use the TAP login we currently use now, or do we have to create a new one?
Good question. Yes, you'll use the same credentials that you have now to log in. We are going to what's called two-factor authentication. A lot of people probably are familiar with that from a banking world, where we'll send you a verification code and you'll enter that. And then you can set a certain device to be a favorite or a known device, and then you don't have to go through that two-party verification, that two-step verification process. But as far as the login and the password, those are the same. But you will see a little bit of change as we're implementing that dual verification.
Great, thank you. Well, there is very specific questions, so I'll go ahead and end it on time. I appreciate all of you presenting. It was a lot of information. It was great, and I will send an email. Everybody has their contact information if you have specific questions, but we're trying to direct you to those email addresses that I will make sure that everybody has in the email. So with that, I thank you all, and hopefully we'll talk with you guys sometime soon. Okay, bye-bye.
Thank you so much. We appreciate you hosting us. It's been a pleasure to speak with you.
Thank you.